I was hoping Bitcoin wasn't going to play out like the last 3 times we had seen this pattern that followed with a 40 to 60% crash. Only a few days in, there is still hope left in this move that hopefully the move will actually fail and we don't get that downside crash, at least for the short term, so we can get some profitable long trades on cryptos and of course Bitcoin as well. But if the pattern plays out and it does crash, then we're set up in both positions, long and short. We're reading the market to be able to set our positions for trades. And even if we're not setting up for trades, at least we understand what's going on like we would with any sort of real-time news, which is what I see the charts to be. Charts are real-time news. The news headlines are old news. So let's look at that and some of the news headlines, which are the big pieces that have been covering the crypto markets over the last 2 days in today's video. Make sure you've liked and subscribed. Thank you very much, or I should probably say grazie mille from Italy. It's where I am this afternoon, and I will be for the next month or so. All right, so Bitcoin, cryptocurrencies, what's going on, what's next? Is now time to be getting some cryptos. All right, well, Bitcoin, anyway, we're down 7.4% from the peak. Remember, this was the level we're watching, 21,700, that yellow line. Many reasons why we're watching that level, and I've covered that in each video over the last several days. In particular, this pattern that we were looking at come in on this video a couple of days ago now. So that one is the critical one to go back and watch, and I'll leave a link to it at the end of this video so that you can catch up to understand that pattern. You can see these horizontal lines here, why we've specifically chosen those levels, why it's important, and what we can do to be on both sides of the market. Yes, there are still a few people who don't understand that the markets are up, down, or sideways and no one can really know, and they think you're cherry picking. It's about understanding the probabilities, and if you are wrong, which there really isn't a wrong, you just have to be prepared for both, then you can make money from both sides of the market. And I think I'm only speaking to the few now because you guys that are still here are really getting it, and I'm seeing it from your comments, so thanks very much. It does feel really good to see that and people are understanding it, you know? You put a lot of time into the stuff and people are getting it, it makes it all the worthwhile. So the thing that we're looking at, basically just as an update for today, for the trades, this market to get rejected at 21.7, and if we're to see the fall, let's use the 4-hour chart here, that level to come back to 20.5 using the previous low here. Now if we use the bigger range low, which is back at $17,500, just to give you an idea, it's at 20K. So that's the 50% level, and that's basically a level that I'm looking for support for Bitcoin. Now it's basically like the strong area that you could still look to take trades to the long side, or if it breaks underneath the 50%, then I'll be looking at possible trades to the downside if there was any sort of retest of the previous support, which now becomes resistance. Then you get the fall away, which can set up for much higher profitable trades. I don't like taking lower possibility of trades. They're just not that great to be taking. So I like the stuff that looks and feels like a much more significant play to the direction that I'm trading. So looking at it now, yes, we got that breakdown. So I think we're going to come back and, like I said in the other videos, we're looking somewhere around 20,500, which is this zone here, and then of course the 50% level. So that's why we've picked those areas and basically just telling it like it's a book or like it's a story, like it's the actual news in real time. You can see 20,500 here, which are the peaks of the previous move up. So that can make for some pretty amazing support and resistance levels should we get back there. So we're not too far off that at the moment. Maybe by the time this is posted and you watch it, we're there. Bouncing away from that point to the upside, we want to see it bounce, of course, and then put in some higher lows again on the shorter term timeframes. This sets up for longer trades and basically can set us in that position to retest that 21,700, which has been a key level for the last 3 weeks, where the market continues to break down from that. I say 3, probably 2.5 weeks at this stage. And then we go for that next peak at $22,500. So key levels for support, 20,500 and 20,000. They're the key levels of support. Underneath that, I would say it's looking rather weak. And if we did break 18.6, which is that low before the market did start to climb again, then it's not looking too good because you're not far away from the next one. And then of course the breakdown starts from that point. So we want to see those key support levels hold up, which then sets us in a good position for longer trades to the highs. Now to the highs, the breakouts, 21.7, we need to get above 22,500 to get above as well, which is that peak right there. And then these little levels here, I don't think are going to play too much of a role, but possibly the 50% back here, the 24.6, which is the larger frame, the bigger term time frame. Get past that, we're looking okay to at least retest this low, if not these lower levels at about 28.5. So there could be some room to run on Bitcoin. And the reason why I see this stuff is really, really important. It's always so important to understand these levels because this is where the FOMO sets in. So that has been a very, very common comment from you guys on a lot of these videos. So it really does help when I do see your comments down there. I might not reply to all of them, but I get to read a lot of them at the moment. The FOMO can set in as the market pushes up. And then if you've got these levels in mind, you might avoid some of the FOMO. Buying Bitcoin at these lower levels, 20K and under, which we've looked at in that significant video a little further back when I'm selling, or at least it was one of those big Bitcoin videos. I'll leave a link to it at the end of this one. It was looking at macro stuff. That can set you up to not lose so much goddamn money by FOMOing in as the market runs up, gets rejected at key resistance levels, and then fades all the way back down where you think, shit, I screwed up again. How can I be so stupid? So that's really the reason for demonstrating where some of these key resistance levels can be so you don't get caught up in the FOMO and you understand what probably will come next from a lot of Twitter and YouTube and all these sorts of calls for 28K or 31K, which are these high levels here. They'll just call a round number of about 30. That's going to be the FOMO stuff, I think. Just like we saw previously in March and April, where we were all looking for about 50 to 52K, and the market fell short at 48K. Of course, we can look to those levels, but when you get signals that the market is about to break down, then you can be pretty sure that you can be pretty sure it's not going to reach those targets when you start to see it break down in the early stages of the swing chart. So that's the really important stuff. So if you want to learn more about that, getting more involved in understanding a market, how to tape read, how to read what the bars are telling us, especially in patterns, on weeklies, on dailies, on hourlies, monthlies, it all works across any time frame. I highly suggest checking out the Investor Accelerator Premium. This is the shell for the video, of course, but this is the trading course that Michael and I put together, and you guys can, of course, learn from this as well. There is over 6 hours in this one course alone. Then you've got the Wyckoff course, so this is looking at Wyckoff volume and also bar patterns. So there's a ton of content in there, about an hour and a half. And there's also the Gann Swing Accelerator. So there's tons in this on its own, plus there's the weekly updates as well, which will join you on Monday mornings, depending on which time zone we're all in. So that's also included within the TIA Premium. Link to this is in the video description. This is learning how to do everything that I've done over the last 12 years in trading and 16 years in investing as well. So that's to do with the real estate cycles. That's included in all of it. So with that understood, let's take a look at what's happening with Bitcoin in terms of the news headlines. I don't go into this stuff too much, but essentially we got an idea of what we're expecting next for Bitcoin. Headlines have been Mt. Gox Bitcoin release. We'll release 3 billion of Bitcoin from Mt. Gox. We'll be able to cause a bottom in August, perhaps. Mt. Gox creditors inch closer to repayments as Bitcoin dump looms. 142,000 Bitcoin could be dumped as creditors eye Mt. Gox repayment. So this is all recent news headlines from, reasonable news sources here as well. Essentially, Mt. Gox was the old school crypto exchange back in 2013 that went bust. A lot of Bitcoin was held by these guys, and I think that's now held with bigger authorities, and they now potentially will release this, and people are getting scared about this in the market. My point on this is we're not really seeing too much downside to this news of the date looming, which means we still might have some upside to go before we get the big mega crash, if that is to happen. There's always an if. There's no guarantees. I know a lot of people think this is a guaranteed thing. Well, they're going to release, therefore it must happen. But what happens if that has already been priced in with the 70% drop already? These are the sort of games that are played by the whales. It's already been dumped pretty heavily. And the pain, if it is to dump a little further to 15 or 14, 13, whatever, the pain will be extreme, but the price drop won't be extreme. Looking at percentages, just facts on the charts. That's as simple as it can be. So that's the Mt. Gox thing. That's how I'm looking at it in terms of news at the moment, because it's been played up, but if it's really that big of a deal, why isn't the price just getting absolutely annihilated? You know, we're hearing all about it now. Sure, it might take some time to play out, and maybe we do get that really big dump later on. So we'll keep an eye out for that. I'm not too concerned about it at this point. Let's see if it holds first. The breakdowns, then I'll be concerned in terms of the price. The breakdowns of these levels, I'll be very, very concerned for Bitcoin in the short term. The other news is Tether liquidates Celsius. Tether liquidated a $900 million Celsius loan. Tether liquidates Celsius positions with no loss to stablecoin issuer. So they've liquidated 900 million, no loss to Tether. It sounds too good to be true. It just sounds like they're printing money out of thin air, which is what we've all come to know about Tether. If it goes on too long, you know, they keep printing and printing and printing and printing. I mean, we know what happens with that, and we just see it in a faster term time frame for cryptocurrency. You know, we get to see how the money printers work in extreme, you know, on steroids type scenarios compared to what's going on in the US. You know, a lot of people say, well, 30% a year is massive, or 50% a year. Sure, it's massive, but you know, that's over 50, 60, 70 years that they've started the printing, whereas now we've only seen it in the last 7 to 9 years, whenever Tether was around, I think from 2013. So that might come to a bigger problem sooner rather than later. But again, it's another big news headline, and we're still not getting absolutely annihilated yet. So just keep an eye on those. The chart, I believe, will tell us before anything in the news actually comes out. You know, if they are dumping things, if there are big problems, we'll see that on the chart before those massive news headlines come out. So Bitcoin doing what we kind of expected it to do, as expected. You know, that's where it's at. That's where I see the possibilities for trading. Second shill is Bybit, of course, $4,450 of sign-up bonuses. If you've used the exchange, you know that it's nice and clean. It's easy to use. No KYC if you care about your privacy, and there are bigger sign-up bonuses if you use the links down below as well. And of course, the World Series of Trading is on at the moment, which is why I like to talk about possibility of trades, but then keeping yourself safe. Don't use any of the trading on leverage if you have no experience in that. Definitely have a plan. Definitely use stops. And that's why I like to go through that here to keep people safe, or just look at your plan and have positions that are protected, because you need to survive long term in this game if you're going to make it. Over 80% of people do lose, so stay safe. Last thing is cryptocurrencies. What the hell is going on here? Is now the time to be buying? Because I've covered this so much, I'm going to just do an update with how far we are from the zone that I think we may get to. Now, there is a possibility, this is something new, there is the possibility of us getting to that zone. I think there's a worst case scenario if Tether goes bust. You know, there's 65 billion in Tether, call it 66 billion. And if Tether goes bust, we're currently at 165 billion. That'll drop us all the way down to 300 billion. And if I think, like I'm still talking about, cryptos going down another 50 odd % from their current levels, or maybe when they do a little bit of a pump, that could definitely drop us into that 150 to 200 billion dollar range. Now I said it's an extreme case scenario, probably the worst case scenario in my opinion. Tether going bust and cryptos going down another 50 odd %. That would definitely get us back in that 150 to 200 billion dollar range. Is it going to happen? Who the hell knows? But worst case scenario is there. It'll get us right to that level. If that doesn't happen, then we're still about 40% away from the top of this box right here at about 200 billion. There are some cryptos which are down 90%. They may go 95 or 99%, and that would be an extra big dump from the levels. If you were to buy in now, that would still be a loss of 40 or 50% if you were to buy in. So there is a tricky game to be played with some of these cryptos if you are looking to dollar cost average into them, and we'll get into this in future videos, because some are looking okay. They're trying to put some bottoms in, and if they do go into a longer accumulation, something you can learn about here in the Wyckoff volume accelerator about accumulation, and then also this right here, this is the timeless investing for long-term freedom. That's what we look for in terms of a pattern for the breakout to then not hold up our capital getting tied up in investments which are going nowhere, for one, and two, which may never turn into a profit. So definitely check those out. Links in the description for everything I've talked about in today's video. Cryptos, I don't think it's the time yet, but I am thinking about certain cryptos soon, probably over the next couple of months, and I'll talk about where those patterns may lie in cryptos on the channel coming up as well. So make sure you're subscribed with the bell notification icon. 30% of you aren't, so do that. Join us on Instagram and Twitter for the travels here in Europe, of course. And I'll see you guys at the next video. Until then, arrivederci.